Buying a business? Check the 401k before you sign.
Unless you like a lot of trouble on your doorstep, then go ahead and do it and just screw yourself over.
Today, we're going to show you why reviewing the retirement plan should be part of every business acquisition and what you should look for before the deal closes. And yes, of course, we're talking about whatever plans are being offered by the company you're looking at buying. The retirement plan of the business you're buying isn't just an employee benefit.
It's not just an account you turn on and off, right?
Yeah, probably not.
Okay.
No. It's a legal plan governed by ERISA, and if there are problems, those problems don't necessarily disappear when ownership changes.
Why do they overlook this? Why do they overlook the retirement plan?
Because they don't think it's important, or it's not an item that shows up in EBITDA. It's generally not an item that shows up on the balance sheet because it's a separate legal entity. Or
finance bros don't give a
I'm guessing, but I don't think so. Based on some recent experience and conversations, it was never, certain elements never even became part of the conversation. Okay, now then.
It's HR's problem, right?
Yeah, actually, HR and culture's problem. Okay, now, most acquisition due diligence for purchasing a company focuses on, like we just talked about, revenue, profitability, taxes or liabilities, contracts, employees. Okay?
Isn't a retirement plan at least like 4 of those?
I was going to say not the way they look at it.
Yeah, I know, but I would say
the way we
look
at it,
contracts and employees,
not the way they look at it. Now, the retirement plan often gets little attention because people assume, well, hey, it's just a 401k plan. The provider handles everything, or we'll deal with it later. I love that one. All right, no, I don't.
I would like to say
Please.
that digging into somebody's 401k plan before you do the sale might actually show you how good they are at running their business. Because if they have a really messy, ugly 401k plan, guess what? They possibly do. They do the same in their business. So,
I've never had a conversation with a plan sponsor where the plan was pristine and the company was a walking nightmare, okay? 51st dates, okay? And the opposite is, true. You talk to a company that's got their I's dotted and their T's crossed and everything's going together, and when we look at the plan, like, things are really done very well. There is a correlation between the business being run and the plan being run, okay? It's not always 100%, all right?
And part of that is, like, do they handle the details all the way to the end? Because typical companies might go, well, I have 15 things to do today, and the 401k plan is number 25. If they're never getting to 25 and it's really screwed up, you may find it in this discovery.
Right.
Okay? So this is a beautiful ace in your pocket discovery moment. What could possibly go wrong?
Well, other than everything, but... Okay, more specifically,
let me tell you the reasons why.
Yes. We need
a daisy.
Yeah, we need to have a metaphorical daisy.
A daisy.
Compliance failures, you got it. The plan may have failed discrimination testing. Deposits could be late. Missed employee eligibility, which is again more money out of somebody's pocket. Whose, all right? Operational errors. May not be doom and gloom, may not be, the end of the world, but you should get things straightened up. Now, these issues can require corrections and additional costs. Sometimes it's fees to the feds, and sometimes it's just money to your friendly neighborhood compliance consultant, help get everything all nice and tidy. Now then.
So it's like making sure that there's not a lot of deferred maintenance on the building, right? You don't want to pay for the deferred maintenance on the 401k plan. You want it handled before you buy it.
Well said. Thank you, dear. Now then, what can be hidden is that there could be benefits offered by the plan that very senior, very key employees are absolutely in love with, that you, as the purchasing employer, do not want to offer. You need to get ahead of those ahead of time.
So many acquired companies are still using outdated plan designs or high-end cost providers. Like we said, there's no such thing as a vintage plan. 1996 wasn't the best year for a plan document and an investment strategy. It's better if they're current.
What this also means that the buyer may inherit a retirement plan that's costing employees and the business more than necessary. You do like the idea of efficiencies.
Yeah, and this is the kind of inheritance you don't want.
No.
Right?
If the plan is not being paid attention to very well, you may very well have poor plan design. So what does this mean, Catherine?
Well, it could lack employer contribution flexibility, which is, you have a bad year, wouldn't you like a way to deal with it? And really, buying a new business, there's going to be a lot of costs in the first year anyway.
Right.
You might have weak employee participation. You might have missed savings opportunities for owners and executives.
From the tax side, right.
And unexpectedly inefficient processes. I would say expected inefficient processes.
Well, no, I mean, you may not understand. Wait, you're doing what? How? Huh? No, don't do it that way. This becomes especially important if the seller plans to remain involved in the business. Now then, what should buyers review long time before closing, Catherine? What should they be looking at? Not just before closing, but as soon as possible.
Ask for the plan document,
okay.
all of it.
Ask is kind of like a polite word of saying, you have to have this. It is
Well,
part of due diligence. It's not optional.
Right.
Okay?
And do you want to review plan provisions, eligibility rules, matching formula, vesting schedule, and recent compliance testing, which means last year's for sure.
At
because
least.
you want to make sure last year's was done.
Right.
You would like more than last year's.
Right.
But it's really bad if they can't give you last year's. Once again, it means that they aren't very good at doing it.
You're looking for ADP and ACP testing, top-heavy testing, annual compliance reports, Form 5500 filings.
Which is to say they have a good TPA that kept them out of trouble.
Yeah, good retirement plan consultant. Yeah.
Yeah.
Now then,
Thank you for translating.
Form 5500 filings will reveal plan size, fees, service providers, and possible potential red flags. Of course, you want to look at the service agreement, right? Who's owed what when? Now then, you're going to want to understand who their service providers are, who the retirement plan consultant is, or what that entity is, what fees are the record keepers paying for, what the investment expenses are, etc. Now, so Catherine's talking about when we talk about terminating the plan. Maybe you're buying a company, and here we're getting to the good stuff. Maybe you're buying a company that has a plan that you want to merge yours into. Okay? You don't always you don't always terminate or get rid of the acquired company's plan. Now, sometimes the retirement plan is not a liability at all. It can become an opportunity. After the acquisition, a better designed plan may allow larger tax deductions, larger owner contributions, improved employee retention, reduced administrative headaches, better testing results, and perhaps enough scale to be offered more services by the record keeper. Okay, right? And or more record keeper options. Okay, if your plan has this much money in it, all right, and the company you're buying's plan has that much money in it, you add them together.
It's more money.
It's more money. Do you have more players to choose from? Are you having more vendors wanting to be part of that plan? All right. Now then, in some places, the retirement plan can become part of the overall acquisition strategy.
That's deeper math and logic.
Yeah. Now then,
stay tuned.
If you would like to learn more, especially if you're a financial advisor or a CPA, we have a monthly webinar that goes deeper into the compliance of 401k plans. And if this was useful, our podcast and other channels are linked below. So please, you know what the assignment is. Don't forget to like, subscribe, comment. Are they supposed to tell their friends and neighbors?
Absolutely.
Absolutely. And most importantly, I realized I haven't been doing this for a while. Don't forget to keep those cards and letters coming. Toodaloo.
And you can send them to sales@hunterbenefits.com.
Oh, yeah, that too.